Krishnan, ASV lead analyst, BFSI at SBICap's joining us as well. And to talk about really the trend going ahead for these corporate banks. Thanks so much for joining us, Krishnan. We also have Lalitabh with us as well from Sharekhan. Let me just start off with you, Krishnan, and get your sense really on what we are poised for when it comes to this quarter earnings, specifically with regard to some of these corporate banks. How are they expected to do?
Yeah, hi, many thanks for having me on the show. So, very clearly, as you mentioned in your remarks just a little while back, normalization of asset quality will be a key trigger. That's already been playing out for about 3 to 6 months across various different types of lenders. So that will continue playing out. We don't expect any incremental news flow that surprises us negatively on the asset quality. I think largely we are past that hump. So NPL formation definitely moderates, but credit costs will continue to stay a bit elevated. I think even into a part of FY20, maybe the first quarter or first half of FY20, we could still continue to see credit costs remaining stubborn. But as far as NPL formation is concerned, I think investors will definitely take a lot of positives as long as NPL formation continues to moderate further.
Lalitabh, what about your take? What do you believe will be the key feature when it comes to the banking earnings? Do you believe that the credit growth that Krishnan spoke of will continue to remain a bit of a niggling factor? Do you see normalization of profit growth?
Yeah, hi. Thanks for having me. Yes, our sense is also that this quarter will see the continuation of the trend of normalization of credit costs that we would be expecting to see with corporate banks. Mind you, they are not at normal levels still, but the trend is definitely going down. Our expectation would also be that Q4 would be one quarter wherein we can see elevated slippages, but they would be trending down. The important thing to be looked at is that how the recoveries are panning out. Our sense is that the recovery should continue to be healthy, and that should be a positive sign as well for the earnings of corporate banks. We would also draw your attention that we are coming off from a period of last 2 years wherein the earnings were largely subdued, mainly because of high credit costs, high provision requirements, and banks also increasingly moving towards a cautious stance. So on a low base effect, we can see much better performance in Q4, and the performance would also start to look much improved in H1 FY20 as well.
Krishnan, though, just want to pick up on the point as to what some of these stock prices have done, be it an Axis Bank, be it an ICICI Bank. We've already seen HDFC Bank in the quarter gone by has made it to a fresh high for itself. Do you somewhere believe that all the positives that the earnings may actually post are already in the price? The market has already made that assumption and the stocks have already moved forward.
Yeah, partly true. I think there are days in the last 2 months or so where we have struggled to find upsides to what we have already put out. So, and most of the forecasts that we have put out are definitely building in a fair amount of optimism in earnings recovery. So is there room for those earnings to be further revised upwards? I think very isolated. But is there a possibility of reflation in asset multiples or just valuation multiples for some of these banks? I think that happens with greater visibility. So once you start getting confidence that you're past the hump, that the worst is behind, then investors who are currently pegging at a stock at say 2 times or anywhere between 2 to 2.5 times, could they look at say a 10% reflation in valuation multiples? That's probably a possibility. But the earnings by themselves, I think us and maybe a lot of the street is already building in a fair amount of optimism as far as earnings revival is concerned.
Lalitabh, talking about that bullish commentary, most brokerages are saying that financials are driving performance single-handedly, and that corporate banks could in fact lead to all the growth we see on the Nifty. So, I know you touched upon it before, but if we could just, sort of talk a little bit more in detail on the key factors that you're tracking this earnings season across the board. Which of those metrics will you be looking at to really see how far they've come in terms of performance?
For banks,
yes.
For banks, you would be tracking something like the recovery pace. Yes, the credit costs and how that is moderating, that is also starting to would be interesting. At the same time, there is some green shoots available that will not be seen across the sector, but at least on the frontline stocks, on the frontline banks, you would see some sort of credit pickup, beginning of those credit pickups. I think these would be the important indicators that we would be looking at this point of time.
Let's get in some of your picks in terms of where you expect to see some strong earnings growth, stocks that you believe investors can look at now as an investment for an earnings bump up.
Yeah. So for this quarter, we hello, am I audible?
You are. Yes, Lalitabh, we can hear you. Go on.
So for this quarter, for banking stocks, so for this quarter for banking stocks, we would be expecting to look at names like ICICI, Axis, HDFC Bank. They should be some of the performers, strong performers. For long-term investment picks, we would like to, apart from these names, we would also like to add names like Yes Bank, RBL Bank as well in the list. We would also believe that Axis, ICICI are one of the are two of the important banks which can have a strong run going forward in next 2 years or so. So these are our picks as of now.
Do you find comfort within banks?
Is that for me?
No, for Krishnan.
Yeah. So very clearly I think the three largest names, Axis, ICICI Bank and HDFC Bank. Between Axis and ICICI Bank, we keep revisiting that pecking order. We have generally had a preference for Axis over ICICI Bank, and with every incremental data point, we try to see if that pecking order continues to put merit revisiting at all. So at this stage, we continue to remain very bullish on Axis, ICICI Bank, HDFC Bank. We also have a fairly constructive view on Federal Bank amongst the mid-sized banks. Yeah.
All right, gentlemen, we'll let you go on that note. Krishnan as well as Lalitabh, many thanks for joining in and giving us a heads up as to what is expected from the earnings season within the banking space.